Hi, thank you for watching Dig Into China. I'm Dang Xiang. If you have not done so already, please subscribe to my channel. Thank you very much. In China, there exists a segment of individuals who lead tranquil lives. These are people who reside in relatively peaceful and comfortable surroundings. They generally experience a high quality of life and are free from many worries, stresses, or hardships. They typically enjoy comfortable living conditions and do not have to be concerned about meeting their basic needs, all within a relatively relaxed social and economic setting. In recent years, the peaceful life demographic has faced challenging times. Many individuals find themselves in difficult situations due to non-performing real estate loans. They are unable to change jobs, have no income, face daily debt collection efforts, and may even be subject to travel restrictions. In some cases, personal connections have been directly frozen. Consequently, these individuals are essentially held captive by financial institutions. The question lingers: when will they be able to break free from this situation? When will they recover their losses from non-performing loans and regain their financial independence? In principle, the peaceful life demographic in China is considered a part of the upper middle class, and most of them have political leanings that align with the concept of a tranquil life. They typically avoid getting involved in anything beyond preserving their jobs and income. However, the situation has drastically changed. Nowadays in China, achieving a peaceful life has become a near impossibility. These individuals are deeply concerned about unexpected and swift deterioration of their circumstances, and they are struggling with a lack of preparedness. It feels like a sudden avalanche, and they are experiencing a profound sense of insecurity. Given the prospect of enduring financial constraints for many years, adopting a narrow focus and disregarding external events is an overly simplistic approach. The iron fist of the Chinese Communist Party can strike without warning. It can even be argued that the probability of affluent individuals in the country being targeted by this iron fist is higher than those of the ordinary citizens, as the government's financial deficit has created a situation where those with available funds are potential subjects for targeted financial exploitation. Let's discuss the CCP's recent 3 innovative methods of exploitation. To begin, we'll delve into the first method, which involves the financial sector's reverse wage claim. A few weeks ago, Everbright Securities released a comprehensive plan for retroactive salary reclaim. This plan outlines 7 specific scenarios in which employees are required to repay the salaries they received in previous years. These 7 conditions are rather ambiguous and could potentially cover a wide range of circumstances. Until recently, the financial sector in China primarily resorted to salary reductions, and there were no instances of previously paid salaries and bonuses being reclaimed by the companies. Surprisingly, in just a few years, even salary reductions have become inadequate, leading to the implementation of salary clawback measures. I'm sure you find it hard to believe that money already disbursed can be reclaimed. Once it's spent, how can you get it back? But this is the situation in the People's Republic of China, and it's truly surprising. It's not limited to Everbright Securities. Several other major securities firms and the national banks began reclaiming employee salaries last year. For example, in 2022, China Merchants Bank retrieved a total of 58 million yuan in employee salaries, averaging 20,000 yuan per person. That is close to $3,000 per person. In comparison, Bohai Bank reclaimed even more, with an average of 48,000 yuan per person, close to $7,000. If employees have debts to manage like mortgages and family responsibilities, it's doubtful they can produce that much cash. If you can't pay upfront, the company deducts the money from your monthly salary until the debt is settled. It's quite an aggressive approach, and this is the reality in China. When you attempt to claim unpaid wages from your employer, you may find yourself accused of disrupting social stability, and it's possible that the police will arrest you. However, if the state is in need of funds, they can invent various justifications to compel you to return the salaries you earned in past years. Resisting this practice is virtually impossible. As long as your bank account holds money, the government possesses the authority to deduct it without restraint. Should you decide to take legal action and pursue a lawsuit, you will soon realize that the legal system in the People's Republic of China is mere of a facade. When confronted with the unwavering authority of the Chinese Communist Party, you are left without any means of resistance, entirely at their mercy. In the past, people tended to view state-owned enterprises as a source of job security. Even if the salaries weren't particularly high, there was a sense of stability. However, this perception has shifted in recent times. In China, state-owned financial enterprises were often seen as offering both job security and substantial incomes. Yet, when the government faces financial constraints, it is the relatively prosperous middle class that becomes the target of fiscal demands. This group, often referred to as the peaceful life or beneficiaries, now finds itself under scrutiny. Regrettably, with the arrival of an economic downturn, these beneficiaries have seen their circle of security shrink considerably. Suddenly, the affluent middle class has come to realize that their wealth has never truly in their control. It was merely held on behalf of the Chinese Communist Party. As the CCP grapples with financial difficulties, they can reclaim these assets at their discretion. Consequently, even members of the middle class must resort to alternative income sources such as participating in ride-sharing services. Many among the peaceful life group now experience regret, attributing their situation to past optimism and political disengagement. They were unprepared for the current developments, caught off guard. However, changing the situation at this point is challenging. Some can even secure passports and are compelled to work for banks without compensation. The second method of exploitation involves imposing substantial fines. This marks the era of profit-oriented law enforcement, when local governments possess the authority to impose fines as they please, regardless of your occupation, whether you are a vegetable vendor or an engineer. A recent incident sent shockwaves through the IT industry when a programmer in Chengde, Hebei province, was fined over $1 million for engaging in work that bypassed China's internet restrictions. A similar fine occurred in Yangxing County, Shandong province, involving a local couple engaged in foreign trade. They promoted their products on Facebook, and as a result, all their foreign trade earnings were confiscated by domestic law enforcement agencies. In the past year, individuals in China faced fines for circumventing internet restrictions, but these fines were rather modest, typically around 3,000 yuan, serving more as symbolic gestures rather than serious penalties. However, the recent emergence of cases involving the total confiscation of income is a relatively rare and concerning development. The underlying rationale for such actions is worrisome. Under this logic, it's plausible that all domestic Bilibili content creators who are also maintain YouTube accounts might be deemed as earning illicit income from their YouTube activities, possibly resulting in the complete confiscation of their earnings. What's more, these fines imposed by the Communist Party aren't restricted to a single year. They could encompass all previous years' income earned overseas. For these content creators, this prospect is nothing short of a catastrophe. Bilibili's advertising revenue is minimal, almost negligible, making the advertising income from YouTube a crucial part of their earnings. Without this financial support, many of them could encounter significant challenges in sustaining their channels. Surprisingly, given the current vigorous pace of such fines, the likelihood of such events occurring appears to be on the rise. The first two tactics are the Communist Party's overt ways of reaching into everyone's private pockets. There is also another method they are using, which involved draining public accounts. Just a few days ago, the Communist Party released the annual report for the 2022 Social Security Fund. Surprisingly, it has revealed that the fund incurred substantial losses last year, totaling 5.07%. In the past, only the year 2008 saw the Social Security Fund experience losses exceeding this level. This means that the investment conditions last year was as severe as they were during the outbreak of the 2008 financial crisis. Looking at it from this perspective, it's hard to characterize China's economy last year as stable with positive momentum. It's crucial to understand that the Social Security Fund's investments go beyond the stocks. The fund's asset allocation has specific guidelines. At least 50% must be allocated to bank deposits and government bonds, up to 10% to corporate bonds, and the remaining up to 40% can be invested in mutual funds and stocks. Presently, the Social Security Fund stock allocation is just around 15%. So, the fact that it experienced losses exceeding 5% while having only 15% of its assets in stocks suggests that actual stock losses for the fund are likely to exceed 33%. This math is quite straightforward. I initially invested $100, allocating $15 for stocks and keeping $85 in bank deposits and government bonds. After 1 year, my account balance has dwindled to just $95. Hence, it's evident that the $5 decline can be attributed to stock losses, signifying a stock loss of approximately 1/3. When factoring in the interest gain from bank deposits and government bonds, it becomes highly likely that the stock losses exceed 1/3. Let's revisit the performance of the A-shares market last year. The Shanghai Composite Index saw a 15% decline. The CSI 300 Index dropped by 21%, and the Qi Next Index fell by 29%. Consequently, the fact that the Social Security Fund incurred losses exceeding 33% implies that it couldn't even beat the overall market. In fact, when we examine the Social Security Fund's investment returns data from previous years, we find that it has consistently faced long-term losses. For example, the 2021 financial report reveals a loss of $111.1 billion in fair value changes of trading assets, indicating that the Social Security Fund suffered a loss of $111.1 billion in its long-term stock holdings. On the other hand, securities prices difference income shows a profit of $132.3 billion, reflecting the gains generated by the Social Security Fund's short-term trading activities. In essence, in 2021, the Social Security Fund managed to maintain over 4% in positive returns, primarily by offsetting its long-term stock losses with short-term trading, thereby preserving its respectable level of profitability. The situation in 2022 took a turn for the worse. The 2022 financial report reveals that the Social Security Fund encountered losses not only in its long-term investments but also in its short-term activities, resulting in an annual return that ended up in the negative at 5%. It's important to note that accounts like the Social Security Fund primarily focus on long-term investments. It's not a place for daily, high-frequency trading for quick gains, as it carries significant risks and higher transaction costs. However, due to the unique nature of the A-share market, even large entities like the Social Security Fund, with their background and expertise, experienced losses in both long-term and short-term investments. This underscores the complexities and the challenges within the A-share market. In this environment, even if you had a 10 Warren Buffett, they might find themselves ensnared in A-share investment for thousands of years. Consider this scenario. If you were entrusted with managing China's Social Security Fund, you successfully generated profits through short-term trading in 2021. However, in 2022, you faced losses even in short-term trading. Would you choose to expand the Social Security Fund's market participation in 2023? Most individuals likely wouldn't make such a decision. Yet, how does the Communist Party respond? It's important to remember that in September, the China Securities Regulatory Commission made a highly publicized announcement about their intention to direct more long-term funds, including pension insurance and the public's social security fund, into the stock market. Recently, the Chinese Academy of Social Sciences released a report. Their calculations reveal that by 2028, the Social Security Fund will be in deficit, and it will be almost exhausted by 2035. However, in this grim scenario, the Communist Party is still determined to have the Social Security Fund enter the A-share market. Isn't this a blatant form of daylight robbery? The question of whether the Social Security Fund can survive until 2035 requires no answer. But as an ordinary citizen, you are obliged to contribute to the Social Security system. Not doing so would be illegal. Thus, every Chinese individual is akin to a common investor, and everyone is caught in the whirlpool of the A-share market. Even if you opt not to invest actively, the Social Security contributions you've made are already within, and they may never be retrieved. In summary, the CCP's comprehensive control encompasses us all. If you choose to be apolitical and disengaged from current events, it's like an ostrich burying its head in the sand. However, what you can hide is only your head. Your backside remains exposed. So when the communist scythe descends, your backside will still be vulnerable. We need to keep our heads held high and our eyes wide open to anticipate where challenges may arise to protect ourselves. Therefore, let's not claim disinterest in politics or live in complacency. The immediate task is to confront reality and proactively assess risks. Thank you for watching. Please leave a comment, follow, and subscribe to my channel. Just click the subscribe button right here. I'll see you again shortly. Until then, be well.